Hey everyone, and welcome back to Explain the Charts. Today, March 19th, 2025, we're taking a look at USDCHF, combining a news overview with a deep dive into the charts. First, let's cover some recent events. According to recent reports, the Swiss National Bank has cut back on foreign currency purchases, and analysts are anticipating a potential rate cut in March. This news, combined with recent Fed activity, is creating uncertainty around the pair. We will keep this in mind as we dive into the technical analysis. Let's start with the daily chart. Looking at the overall trend, we can see significant volatility over the past year. We had a strong downtrend followed by a period of consolidation. Recently, the pair has seen some upward momentum, but it's crucial to identify key resistance levels that might halt this advance. Zooming in on the more recent price action, let's analyze some important levels. Notice the candles from late March 2025, where the price attempted to break past 0.905 but faced strong rejection. This area is now a key resistance level. A sustained break above this could signal further bullish momentum. On the downside, we can identify a potential support level around 0.877, which has acted as a bounce point in the past. If the price breaks below this level, we could see a retest of lower supports. It's also worth noting how the market reacted to the SNB news, with a noticeable dip followed by a slight recovery. This shows the sensitivity of the pair to central bank announcements. Now, let's switch to the 1-hour chart for a more granular view. The hourly chart provides a closer look at recent price action and volatility. Looking at the last few days, we observe a choppy sideways pattern, indicating uncertainty in the market. We can see a support area around the 0.876 level, acting as a short-term floor. On the upside, the pair is struggling to break the 0.88 level. For short-term traders, it's important to watch these key levels for potential breakout opportunities. A break above 0.8800 on the hourly could signal a bullish continuation, while a break below 0.8756 may suggest further downside. Considering the news regarding the SNB, this might induce some short-term volatility. It seems as though the Fed could potentially hold its current position, which could possibly bring it down to the support level again. Now let's switch gears and look at the 15-minute chart for very short-term trading opportunities. This time frame will really let us narrow down the intraday support and resistance levels. On this chart, the key level to watch is 0.884, and if it can break past that. Looking at the overnight trading volume, we can see if there's an edge when the European markets wake up. To recap, here are the key levels to watch. Resistance at 0.905 on the daily and 0.8800 on the hourly. Support levels are at 0.877 on the daily and 0.8756 on the hourly chart. The likelihood of the price breaking above 0.905 on the daily chart is moderate, contingent on positive U.S. economic data and a dovish Fed stance, estimated at about 50%. Conversely, the chances of the pair dropping below 0.8756 are also moderate, roughly 50%, influenced by SNB policy and any signs of Swiss economic weakness. Keep an eye on these levels and the ongoing news flow to make informed decisions. Good luck trading!